You are further from owning a home today than you were 5 years ago, and every month of rent and rising costs pushes it further still. Every calculator, every headline, every conversation about the housing market says the same thing to the buyer watching this: you cannot afford to buy. That is true in most of the country. It is not true everywhere. 5 areas in the UK still pass the affordability test right now, where the prices, the deposit, and the mortgage term all work on a single income without family help. The first area is Inverclyde in Scotland. Nationwide confirmed this month that Inverclyde is the most affordable local authority in Britain. The average first-time buyer property costs 2.3 times the average local earnings. The average home is priced around £100,000. A 10% deposit in Inverclyde is £10,000. That is savable in under 3 years on a local income without a gift from family, without an inheritance, and without a second salary propping up the application. On a 25-year mortgage at current rates, the monthly payment on a typical Inverclyde property sits well within the 30% of take-home pay that Nationwide uses as the long-run affordability benchmark. The buyer here is not stretching. They are not being pushed onto a longer term to make the numbers work. They are buying within their means on a standard mortgage. That sentence alone separates Inverclyde from most of the country. In London, the average first-time buyer property costs nearly 14 times local earnings. In Inverclyde, it costs just over 2. The buyer watching this, who has been told the market is out of reach, has been told the truth about one part of the country and a lie about another. Scotland dominates Zoopla's top 10 areas for house price growth in 2026. Homes in nearby Motherwell are selling in 14 days. Only 6% of sellers in Glasgow are cutting their asking price to find a buyer. The market in this part of the country is not waiting for conditions to improve. It is already moving. The buyer who delays is buying at a higher price than the buyer who acts now. Is Inverclyde one of the best areas to buy property in the UK right now? On the affordability data, it is the best, and it will not stay this affordable if the growth forecasts are correct. The second area is Burnley in Lancashire. Average price around £117,000, under 3 times local earnings. A 10% deposit comes in under £12,000. Burnley is one of the cheapest places in the country to buy a home. What makes Burnley different from other affordable areas is the housing stock. A first-time buyer here can buy a terraced house, not a flat. That matters right now more than it has in years. Across England and Wales, flat values have been falling while house values have held or grown. In London, nearly 40% of new-build flat sellers sold at a loss in 2025. The buyer in Burnley starts on a property type that has historically kept its value. The buyer in a city flat starts on a property type that is actively losing it. Burnley sits within commuting distance of Manchester, where the economy is growing at double the UK average. The buyer who has been priced out of Manchester at $220,000 does not need to give up on that economy. They need to look at where the same rail line takes them for less than half the price. Burnley is not a compromise. It is an alternative that costs less, offers a house instead of a flat, and connects to the same employment market that is driving growth across the Northwest. The buyer who frames it as settling is looking at the postcode. The buyer who frames it as strategy is looking at the numbers. The numbers favor Burnley. Is Burnley one of the best areas to buy right now? It is not glamorous. It is affordable, connected to a growing economy, and the housing type protects the buyer from the flat market collapse happening elsewhere. For a first-time buyer who needs the numbers to work today, those 3 things matter more than the postcode. The third area is Kingston upon Hull. 3 times local earnings. The most affordable local authority in Yorkshire. Average prices well under the national figure. A 10% deposit is comfortably under £20,000. Hull has attracted over £3 billion in regeneration investment since its City of Culture year. The Albion Square development, the East Bank Urban Village, and continued infrastructure spending are reshaping the city. Projected price growth for Hull sits well above the national average over the next several years. The buyer getting in now is buying before the regeneration premium arrives in the price. That is not speculation. It is the pattern every regeneration city in the UK has followed. Leeds, Manchester, Liverpool, all saw prices rise steadily as regeneration spending landed and new residents arrived. Hull is earlier in that cycle. The prices have not yet moved to reflect what is being built. That gap between what the city is becoming and what it currently costs is the opportunity. It will not last once the regeneration completes and the market catches up. The buyer who looks at Hull and thinks it is too far from where they imagined buying needs to ask a different question. The areas where most buyers are competing are the areas where prices are rising fastest and affordability is worst. The areas where buyers are not looking are the areas where the numbers still work. Hull is one of those areas. The data says so. The earnings ratio says so. The deposit requirement says so. Is Hull one of the best areas to buy right now? Its affordability ratio is the lowest in Yorkshire. For a buyer whose income is average and whose deposit is modest, that ratio is the difference between qualifying on a 25-year term and being pushed onto a 40-year one. The fourth area is Wigan. Wigan is the only location outside Scotland in Zoopla's top 10 for house price growth in 2026. Average prices sit under £160,000. Prices grew 3% in 2025, and Zoopla expects the momentum to continue. Wigan is connected to Manchester by rail and road. Manchester is the economic engine of the Northwest, with employment growth predicted to lead the region through 2026. The buyer who cannot afford Manchester at $220,000 can buy into the same regional economy from Wigan at roughly two-thirds of the price. Same job market, same transport links. Different price tag. The commute adds time. The savings on the mortgage payment add thousands of pounds a year. For a buyer making the decision between renting in Manchester and owning in Wigan, the maths has already been done. Owning wins. Buyers are arriving in Wigan who were priced out of the city next door. That demand is what drives prices upward. The buyer who gets in before that wave reaches its peak is buying at the front of the growth, not the back of it. Every month of waiting is a month of that growth the buyer pays for instead of benefits from. The areas where buyers are arriving from more expensive neighboring cities are the areas where the next round of price growth will land. Wigan is one of them. Is Wigan one of the best areas to buy right now? It is on Zoopla's growth list for a reason. Demand is arriving. Prices are still affordable. The buyer who acts now is ahead of the curve. The buyer who waits may not be. The fifth area is Hartlepool. Under 3 times local earnings. Among the most affordable areas in the north. A 10% deposit that does not require years of saving or a family gift to reach. What separates Hartlepool from the areas that are merely cheap is what happens after the buyer moves in. The north has the smallest gap between the most and least affordable areas of any region in the country. The buyer in Hartlepool is not spending every penny on the mortgage. They have room in their budget after the payment lands, room for savings, room for the unexpected, room for a life that is not entirely consumed by housing costs. That room is the difference between owning a home and being owned by one. The buyer in London or the Southeast who qualifies for a mortgage is often left with nothing after the payment. The buyer in Hartlepool qualifies and still has a budget that works. That distinction does not appear in any headline about the housing market, but it is the distinction that determines whether homeownership improves a life or just replaces one set of financial pressures with another. 70% of local authorities in the UK saw affordability improve over the last year. The North led that improvement. The direction of travel in this part of the country is toward the buyer, not away from them. Prices are not running ahead of earnings. They are tracking alongside them. That is what a functioning market looks like. Is Hartlepool one of the best areas to buy right now? It will not make a headline. It will not trend on social media. But for a first-time buyer looking at the numbers honestly, it is one of the few places in this country where a single income, a modest deposit, and a 25-year term are enough to get in. Those are the 5 areas. Here is why the timing matters. Mortgage rates moved sharply this month. The average 2-year fixed rate climbed from 4.83% at the start of March to over 5.28% in less than 3 weeks. The average shelf life of a mortgage deal halved between February and March, from 33 days to 14. Hundreds of products were pulled in a single week. Sub 4% deals that were still on the market at the start of the month are gone. The mortgage that makes these 5 areas affordable at current rates is not guaranteed to exist at the same price next month. Every rate increase removes buyers at the affordability margin. Every product withdrawal narrows the range of deals available. The window is open. It is not open indefinitely. If any of these 5 areas are within reach of your income, run the affordability calculation at today's rate before the rate moves again. Do not run it at the rate you saw advertised last month. That rate may already be gone. Run it at what is available today and see if the numbers still work. The numbers that work this week may not work in 4 weeks. The deposit you have saved is enough in these areas right now. Whether it will still be enough after the next round of repricing is not something anyone can guarantee. 5 areas in this country where a first-time buyer on a single local income can still buy a home on a 25-year term without family help and without being pushed onto a 40-year stretch. The national conversation says the market is unaffordable. In these 5 places, right now, it is not. But every rate increase this month makes that list shorter, and the rates have not stopped moving. Subscribe to the channel because this window is measured in weeks, not years. This channel tracks which areas are still open and tells you when they start to close.